Hi, Peter Rose, founder of Longwood Currency Trading, and today's video, or I don't know, I might do another video later, but the video that I want to do right now for you is the advantages that the 50-year-olds and above have in learning to trade Forex and in trading Forex. I'm 70 years old, so I think I have some opinions on that. I had just done a video the other day on the advantages in the 21 to 34-year-old age group, and why I kind of target a lot of the stuff that I have to say about trading to that age group. And so I want to kind of give the 50-year-old and age group and above their information on the trading. Just got back from a hike up mountain close to us, and as you can see, maybe we got our shoes drying out because it was pretty wet. It's been raining pretty hard the last few days up here, and so and my hiking boots, we went out to Utah a couple of years ago, and I had these. They aren't really boots, they're just shoes, and geez, they got ripped up on the side. I still use them for climbing around on the mountains around in here, but when it's wet, my feet get wet, and it's just a mess. But so anyway, in my video on the advantages that the 21 to 34-year-old age group has is their willingness to learn how to assume a risk, not take a risk, but assume a risk. They're not afraid of risking their money, and they understand that loss is going to be part of the game, and that it's more difficult for the 50-year-olds and above in order to do that because of the family responsibilities that you have, your job. You know, you've been living for years bitching about, you know, if you can only make 10% more on your income, you could do X, Y, Z or whatever, and most live fairly close to just break-even line on a monthly basis. So to ask them even to put up $1,000 and take a swing at this stuff that's asking a lot sometimes. So I'd like to address some of the issues that we look at as problems of the 50-year-olds and above, and turn them around into showing what the advantages are that you guys have if you're watching this and you're 50 and above. Like I said, I'm 70 years old, and I'm doing this currency trading thing. If you've watched any of my other videos, then you know my sad story of coming out of the real estate investment world and retiring, and kind of mixing up and confusing the methodology that I needed to employ in trading in the currency markets, where you've got this tremendous leverage that creates volatility, and the decision-making process is different than in real estate. The rules tend to be the same, but it's the timing of the application of those rules that can be different and difficult for someone to make that transition if you're not taught. And I wasn't taught. I didn't have a mentor. I just I thought I could figure it out. You know, I've got a bachelor's in physics. I had a 33-year career as a software engineer. I'm pretty smart. I can read, I can follow directions and learn, and so I thought, gee, I can do this. I can learn this on my own. And I did, because it's easy to learn. The trading is simple. What gets in the way is misinterpreting the time, if you've done other types of investments before, the volatility, and also how your emotions work against you differently than they do. For example, in real estate, the example I gave is, you know, you can buy a building and realize that none of your tenants have leases, and that, you know, that's a mistake, and so you might have 6 months in order to correct that, or 3 months, or whatever. You've got time. The whole world isn't going to come to an end because some tenant doesn't have a lease. In currency trading, that timing is different. You see something wrong in price action, and you're holding an active position at that point. Man, you got to pull out. You got to pull the trigger, and you got to get out. And you got to have some very clear, defined, automatic rules in order to manage generalized and standard situations. So that was my problem in that transition. And I've run into another problem now, as I've admitted to everybody that because of that lack of training, I started out trading a simulated account of $40,000, and so when I opened my real account, I opened it with $40,000, and nobody told me that trading in a real account was different than trading in a simulated account. The emotional impact I thought I had under control because I've spent 50 years in the martial arts. But look, it's a different kind of emotional issue that you deal with. And you compound all that stuff with the fact that right off the bat with that real account, I ran into the probabilistic 6 losing trades in a row right up front. That took $12,000 or $15,000 right. That was like shit through a goose gone by. And so I was just mystified. In any event, I learned. I figured out what the deal is. It's not difficult. It's about managing your risk and some other things that somebody's got to be there to teach you, because you're not going to learn it from a book. In any event, I learned them, but I had run through that money, and I wasn't going to refund a large account until I sold my last building, and that would be my thing. I could have refunded at any time, but I thought, well, I'm just going to go back and trade a small account, a mini account, and make sure that the methodology that I feel is appropriate for the markets, it works. So I was trading a $5,000 mini account. From that point, and I don't know, it took me about 4 or 5 months to double that, and I thought, well, I've got this pretty well under control, and then I went back and didn't follow my rules and lost some money and back and forth. So I said, look, this is not working. Let me go back to the really basics. If I was going to teach somebody how to do this, what would I do? Well, I'd tell them to learn in a simulated account with $1,000, and then open a real account with $1,000 and make your mistakes that way, so that you can think in terms of the pips instead of the dollars. That was one of my big problems when I was trading the large account. I was looking for profit targets that were $1,500 away, and am I risking $800 or $1,000 to make that $1,500 target? And so, I'm pushing back and forth the down payment on a car, for God's sake, instead of trading by pips, which is what I advocate for anyone who's going to get into this stuff, is you have to learn to trade for the pips. Why am I going over all this stuff that I've done in other videos? Because this might be the first video you've watched. You got to have the background. But more importantly to that, all of these things directly address the issues that a 50-year-old or above, a 60-year-old or my age, 70, is going to face in getting involved in the currency markets. And the caveat to that is, it's the reasons why they don't want to get involved in the currency market, because there is that risk. I mean, there's a very well-known statistic at this point, the 90-90, I call it the 90-90 club, that I'm a valued member of, where 90% of the traders lose 90% of their money in 90 days. And the reasons why that happens, it isn't that people don't know how to trade, it's that they don't know how to apply the trading rules that they have properly. That klaxon submarine sound was my phone going off, some stupid scam call. But the material that we're going through here is directly applicable to the 50-year-old who looks at the statistics of that 90-90-90 club and says, I don't want to take that chance. I can't take that chance. I can't even take that chance with a couple of $1,000 because, shit, man, that's my mortgage payment if I lose that. Well, there's certain things that you need to learn that will take away those fears, and that's where your advantage as an older trader comes in, is that you have the ability to take a broad view of the information that's presented to you and to make rational, valid decisions. The younger traders go, oh yeah, man, that sounds really fucking good. I'm going to go. You have to put a choke chain on the younger guys to pull them back. the older you are and the more experience you have, yes, you've been beat up more, and so you don't want to be beat up again, and so you just stick with what you know, and you go through your life. Look, that's like building a boat and keeping it in the harbor the whole time. I mean, you have this wonderful life, and maybe your life isn't so wonderful. We'll make it wonderful. You know, you have that choice to do that. I'm not trying to bring in all my 50 years of martial arts philosophical background here for you, but Jesus, what are you going to do? You're going to sit in your chair and feel sorry for yourself because you're like the majority of Americans who right now who couldn't come up with $400 in an emergency? Are you like the average in the, I think it's the 54 to 64 year old age group whose net worth is $103,000? What are you going to do with that with Social Security? So you're afraid. Well, if I lose this $2,000, that $2,000 might be a month's worth of living when I'm in my 70s or 80s. I need that money. I can't risk that money. Well, your money's devaluing as time goes on anyway, and the older you get, the more likely it is that you'll get whacked out for job age discrimination. Look, I was a software engineer, and when I hit my 50s, I started seeing that when I was looking for jobs. Nobody would admit it or whatever, but man, I tell you, that discrimination is there. And I'm glad that I was good in the areas that I was. I wasn't so good in all the areas like a lot of the really brilliant people are, but I was really, really good in certain areas that were critical to the business. I was a business applications programmer. So the stuff that I was really good at, deciphering complex problems and putting forth programmatic solutions to them, you know, I was able to get a job, whereas a lot of the folks that were advancing along with me that were my age, they weren't so lucky. They weren't able to get jobs, and they had to change their careers. I mention that all the time. But it's very difficult. Well, it's really difficult if you're in the 21 to 34-year-old age group to, excuse me, to put your, I guess, imagination toward what it must be like to be 55 years old and realize you're out of time as far as building any kind of substantial net worth through conventional means. I mean, what are you going to do? The most you can put in a 401k today, this is 2020, is $17,000, I think. Well, okay, you say, well, that's a lot of money. Well, yeah, but if you do it over 20 years, what's $17,000 times 20? It's a little under $400,000, yeah? And you're going to get 7% in return in your thing, so that's going to compound every year. So, you know, I mean, yeah, that money could be there. Oh, unless you run into a crisis situation like we are right now, where the fucking market's gone down 50%. How's that working out for the group that has a couple of $300,000 in their IRAs or in their 401ks? You know, mine took a tremendous hit. I lost 40%, I guess, in my IRA. But I didn't have that much in there because all my money went into real estate. And so you as a 21 to 34-year-old, it's very difficult for you to look forward to being 50 or 55 or 60 and say, gee, I don't want to be that scared, because they don't recognize that there's fear out there. Fear of the future. How am I going to take care of my family? How am I going to pay the rent? Food prices are going up. Gas prices are going up. Everything's going up. How do you manage that? What happens if you get sick at work or fall down and break your leg? You know, my son's an auto mechanic, and he's been doing that for 15 years. He's in his low 30s right now. And he looks around at the guys. I told him, I said, look around at the guys in the shop that are 50 and above and tell me that's where you want to be in 20 years. And he goes, no fucking way. No way. Because he could see it. They got all these toys, but they got high mortgages. Their shins hurt. Their backs hurt. What are they going to do if they break their ankle? And all of a sudden that $70,000, $80,000 a year income as a master mechanic, and that evaporates. And you're out of work for 6 weeks or something. You think the dealership is going to wait around, hold your job for you? I don't think so. You're going to be able to go back to work and do that? I don't think so. Man, there's some really fearful times ahead if you're not prepared early. Well, what happens if you are 50 years old or 60? What are your options at that point when you recognize you didn't quite pull it all together before? Either because you didn't understand that you needed to do that, or you didn't have the tools to do that, or you didn't have the opportunity to do that. God, you know, there's a lot of the younger generation that are taking care of their aging folks right now, as they don't have the opportunity to amass all of this money. So they're going to be in that situation when they get into their 50s and 60s, that they've lost some of the premier earning power, earning potential that they should have had, and now they don't have that. So if you're in that 50 and above age group, those are all the negative things of being 50 and above, and of not taking advantage of the time that you had when you were in your 20s and 30s. You just didn't have, maybe it's not your fault. Of course it's not your fault. You do the best that you can. All I'm trying to suggest to you is that there's still something that you could do in your 60s. I'm 70, and I've gotten out of real estate. There's a lot of reasons I've got out of real estate, and I wouldn't get back into real estate on a bet in today's market or tomorrow's market either. That game has changed. All those folks out there that are pushing real estate, they're not pushing the way the little guy can get involved, other than, oh, put your $50,000 into this managed fund and we'll buy these massive apartment building complexes. We'll buy these massive malls. Oh, that's great. What if you went into the mall situation 5 years ago and you were counting on your coupons clipping from those investments, and malls are crushed today? All these major retailers going out. So what are you going to do? What are you going to do? You have to get involved in a vehicle that's going to allow you to make money with a smaller learning curve than my son had to go through, for example, to learn how to be an auto mechanic. It took him 2 years to go through an associate's degree in automotive mechanics. Do you have 2 years to learn currency trading? Will it take you 2 years? Hell no. It will take you 2 weeks. If you have somebody teaching you or guiding you, it might take you a couple of years of reading and working in a simulated market and easing your way through in order to do it, if you're going to do it without somebody showing you how to do it. I mean, look, I spent 4 years. I had opened a small mini account. I lost that. Real account. This is after trading for a couple of years in a simulated account. I opened another. I refunded that one, and I lost that money. I thought, oh man, I'm going to shut this down. I'm just going to go back to the simulated account. I traded in a simulated account for 4 years and read hundreds of books and watched hundreds of videos, and I even wrote books and studies and did computer simulation analysis. And opened this large account, and didn't work. If I would have had somebody to point the way to me, I wouldn't have had to go through that. It wouldn't have taken me 4 years to learn what I learned. You know where I learned it all? I learned it when I lost all that money. Well, the 50-year-old is not going to want to lose $20,000 to learn how to do it, because he's not going to have any money left to do it. So that's why you start with $1,000. I don't care how poor you are. You can come up with $1,000. If you're buying a pizza once a month, or driving around in your car to see the fall foliage, let me tell you something. There's ways that you can cut back on your expenses so that you can save up $1,000 so that you can learn how to do currency trading. And look, and I don't run a training program, but I've had people that have come to me and said, you know, I'd like to learn how to trade. I've got a 3-month program that takes you through the basic mechanics, and I don't teach mechanics. I don't teach beginner students. I give them references. Here's how to learn the plumbing. These are the mechanics. When you get done with that, come back to me and I'll show you what to do with it. In any event, that's a 3-month process in which you fund $1,000 mini account, learn how to do stuff, and then you go into the real live account. But look, guys, yeah, you are going to lose. But the $1,000 that you put up, let's say 500 of that is going to be margin. That's just like a down payment on a house. That's to sit at the table. You know, if you go to play poker, you know, how much money you got with you? Oh, I got $200. Well, you can't sit at this table. You need $500 to sit at the table. Okay, that's the currency market, trading a mini lot. You need about $500 under most currencies. Sometimes you get away with $300. A couple of them right now are $650, $700 just to sit down at the table. So let's say it's a $700 margin out of the $1,000 that you have. That leaves you $300 to play with at $1 a point. Well, you'd have to lose 300 points before you had to reload that account. And as I've said before in other videos, if you do this the right way, you ain't going to lose 300 points. You might lose 100 or 150, and then you're going to make 50, and then you're going to lose 10, and then you're going to make 50, and then and it's all going to be this flux back and forth, just like a poker game. When you got sat down for you to play your first poker game, did you win? You got cleaned out a few times. That's why you start in the nickel dime games. When I was playing poker, I was playing 10-20. I ended up 10-20, and then the general rule that I went by as I was playing Texas Hold'em is that I wouldn't go into a game unless there was a week's salary at stake. So you learn where it doesn't hurt so much. The main thing is you got to get over your uncertainties about going into this unknown foreign currency world where all the important instructors and educators tell you how difficult this is, and you have to learn all about fundamental analysis and you know, the economies of the different countries, and you got to watch out for the non-farm payroll, and you got to study these books, and you got to learn these chart patterns, and you got to do all the no, you don't have to do that. If you were going to learn how to swim, how would you learn how to swim? You'd wade out into a little shallow end of the pool, and somebody'd be there, and they'd say, okay, lay down on your back in the water, and I'll put my hand under it, and I'll hold you up for a minute, and then that's floating. Okay, so you'd float around here. You get 3 feet of water below you, you're okay, float. How comfortable do you feel about floating? I feel real comfortable. Okay, great. Going to jump in the deep end of the pool and float around out there. Because there's no difference between the deep end of the pool and the shallow end of the pool when you know how to float. If you understand that, that's the same principle that you should use to look at getting involved in the currency markets. Find somebody who knows what the hell they're talking about and can speak your lingo to get rid of your fears about all this stuff. This could be it. This could be your opportunity to put some money on the table. Well, how much money do you make? Well, look, I'm trying to make 0.5% on my risk a day. So if I'm risking $1,000, I'm looking to make $5. You say, $5? What's that? Yeah, but if I can do that 4 days a week, that's 2% a week. That 2% there, that's already more money than you've made in a whole year in a savings account. The best you're going to make in the stock market over the long run is 7.5%, 8%. The best you're going to do in real estate is going to be about 8%. Any commodity is about between 5 and 8% over the centuries of all time. Where can you make 5 or 8% a month? Now, I'm not saying that you can do that, but there are certainly an inordinate number of traders who make those kinds of returns. Now, they either may not be teaching this stuff, or they may be trying to teach it, but they don't know how to teach. That's the problem that I ran into. I was listening to these people and what they were saying, and I was duplicating exactly what they were saying, and I'm a pretty smart guy, and I lost my money. And it isn't because they're stupid or they don't know what they're doing or they're trying to gyp me. They don't know how to teach. It's as simple as that. So you got to figure out for yourself, if you were going to learn how to downhill ski, would you go to a 10-year-old? You do some research and find somebody who you put your trust in that wasn't going to put you on a black diamond and kill you in the first 2 hours. You have to be rational about this stuff. Don't be afraid of it. Look at it realistically. Here's the plan. Like anything, there's certain mechanics or plumbing in order to learn the skill. In driving a car, you've got to learn what a stop sign is. You've got to learn where to put the gas in. You've got to learn how to put the windows up and down and the rules of the road and all that. That's all the plumbing and the mechanics. How to turn the car on. Where's the brake? Where's all that other stuff? That stuff in currency trading, most of the educators out there are charging anywhere from $300 to $2,000 to teach you that stuff. Would you want to pay $2,000 for somebody to teach you where to put the fucking gas in your car and where the brake pedal is? Yeah, I don't think so. If I'm going to work with somebody, there's a book reference that I give you. You read the first 50 pages of it, and you're done. You know everything that you need to know as far as the mechanics and the plumbing. Can you implement that stuff, or can you use it? Well, of course not. You need to be shown how to apply that. That's why I don't teach beginners. Because if you're not willing to learn that really basic fundamental stuff on your own, what am I going to do? Drag you across the finish line? I don't have fucking time for that. I've been teaching karate for 50 years. I step on deck and I say, look, this is what you need to do if you want to save your life. You better do it. And there's no arguments about it. If you want to argue with me, go train with somebody else. It's as simple as that. And if you can't find somebody who's willing to teach you as an adult, don't waste your time. Just because some guy's driving around in a rented Lambo is no reason for you to think they know what they're doing, or even if they do, that they can teach you how to do it. So, rest assured that you can learn the mechanics and the plumbing of foreign currency trading in as fast as you can read 50 pages. Now, you might have to read that 50 pages 2 or 3 times before, when you actually get out there, you'll say, oh, candle, pin bar. Oh, okay, I understand what that is. Oh, the difference between a simple moving average and an exponential moving average. Oh, yeah. Oh, I see how that's applied. I remember what it is, but I didn't know what to do with it. Now I see what to do with it. That's why you got to learn the mechanics first, right? Okay. Then you got to learn how to trade. Well, what's trading? It's evaluating your price action on a chart. And there are certain indicators that you can use to help you visualize what's happening with those price indicators. If you use too many indicators, as I've said in other videos before, just using 5 indicators will put up 325 different permutations that you can apply those indicators in. So that's not the complexity that you want to look at if you're 60 years old. You want something simple. Great. Here's 2 indicators. It's a binary choice, and this is what those 2 indicators will tell you about this chart. And underlying what the indicator is telling you about the price action is then you begin to understand the economics behind why the price action is happening. It isn't because you're out there putting your bid ask in there. It's because some large institutional trader is putting through a $4 billion order for his client out of Citibank, and they're trading currencies so this guy can purchase $4 billion worth of auto parts to bring into his plant. That's what's causing the price movement, and the retail traders are just following along with that. So then you begin to understand a little bit about that. But as you're doing that, you're learning how to apply the principles of the mechanics in a simulated account with a $1,000 balance, trading for pips. So you're not worried about, oh, this pip could be worth $100 when I finally get my big account. Well, no, don't worry about it. Don't worry about it. Just worry about it. It's 1 pip. It's 1 pip. $1 a pip, but it's 1 pip. And so if you can make $5 a day on a $1,000 account, you make a half a percent. But if you start thinking about that $5 as a pizza, then you're up the wrong trail. And as a mentor, that's what I that's my big job in herding cats, is to get you not to be looking at the dollar values, looking at the pip value. As soon as you can extract yourself from the financial end of it, which you've done for your whole life, 60 years, but looking at the dollar value of something. Oh, I'm going to buy that car. I'm not buying a car. I'm paying $20,000 for that car. No, we're paying 20 orange chips for that car. We're going to treat this just like the professional poker players do. They don't trade $20,000 in cash. They trade 20 orange chips, okay? It takes the emotion out of it. And it's the emotion that's preventing you from looking realistically at what the currency markets are all about. So take those emotions out. That's what you have to train yourself for. It's like in swimming. You're not going to be able to swim a race if you're afraid that you're going to drown because you don't know how to float. So you got to learn how to float. Once you can float, then you can swim and you can race. And it's just a matter of each time you race, you learn a little bit more. I did a video not long ago on Jesse Livermore's advice or quote. He said that the only way to get a real education in the market is to invest cash, track your results, and study your mistakes. Man, it really isn't any harder than that. Those 3 rules. But you got to invest cash. You got to have something that will hurt. I mean, that's when you get into the real account. But you're not going to learn how to trade in the simulated account. You're just learning the plumbing. You learn how to trade when you put real cash up. And so even though you're trading for pips, at the end of the day, it's 10 pips, which is, that's 1% of your account. You go, shit, if I do that 100 more times, I'm going to be out. So how do I not do that? But again, as soon as you look at that 20 or 30 pip loss as a pizza, you're screwed up. That's where I would come into play. Smack you upside your head. Don't think about it as a pizza. It's 30 pips. Don't lose 30 pips because it's 3% of your account. Look, give this thing a serious analysis, a serious view, because it could change your life. Yeah, maybe you only can come up with a couple of $1,000s right now, today, or whatever. But if you got into this stuff and you were training and you saw the opportunity, man, you'd start saving your money like a champ. And you can make a pretty good wage, not a professional wage, but you can make a pretty good wage on a $30,000 account. I mean, you might not be able to replace like a opening assistant manager salary in a store or something like that. But it's a start, because if you can make, let's say you make 20% a year on your money, that $30,000 then becomes $36,000. I mean, it grows. You just can't lose it. You really can't have any control over what you make, but you have a lot of control over what you lose. And you can limit that. You can cut that off. You can be taught that. You can be taught to wear a seatbelt so you don't have to be afraid of getting hit when you're driving in your car. First, you got to learn how to the mechanics of the car. Then you got to learn how to drive the car. Then you got to learn how to drive the car safely. That's how you learn currency trading. There's tremendous opportunity here because of the leverage and the volatility that's there if you know how to do that. If you don't know how to ride a horse, then you're not going to want to get on a bunkin' bronco, right? So learn how to ride the horse first. In this case, you could replace your income in your currency trading. And when you get up to the point where you're going to need to retire, you got some Social Security coming in, and you've got this skill now where you could make twice what your Social Security is on a monthly basis. And man, I tell you, even if you could make half more of your Social Security, when you're down crunching on the wire, that extra money is going to come in really, really handy. And if you're 50 years old and listen to this, you know that. You know that what an extra $400 or $500 a month would do for you. And don't kid yourself. So I just wanted to take this time. It's gone on longer than what I wanted to, but it's so important. It's so important. Yes, the 21 to 34-year-old group, if they pull their heads out of their asses and they look at this stuff, they have a tremendous advantage over you if you're 50. But that doesn't mean that if you're 50, you need to throw your hands up and whine and pine, because nobody likes a whiner. It's like the third grade, as in the movie Wall Street, Money Never Sleeps, right? Don't whine and complain. Get out and do something. This stuff is, it's very simple. It's not easy, but it is simple. Give it a shot. Give it a try. If you're watching this and you have any interest, send me an email, and I'd be happy to maybe give you some references or whatever to what to go and look at and read to get a better view of what this is. Don't watch some of these videos on YouTube with these guys driving around in these fancy cars and splaying money all over the place. It's just stupid shit, you know, and I've gone into that before. My name's Peter Rose, founder of Longwood Currency Trading. Have a great day. Have a great trading day.